Okay, good evening, everyone. This is Wednesday, August 14th, 2019. I call this regular meeting of the Brookfield Board of Finance to order. Please rise and join me for the pledge. Pledge allegiance to the flag of the United States of America, and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. Okay, thank you, everyone, for being here. We do have two absent members today, but we do have four of us here, so we do have a quorum, regular business as usual. First order of business, public comment. Do we have any members of the public here with us tonight that would like to give comment? Okay. Hearing and seeing none. Move on to communication and correspondence item. We don't have any recorded for this time around. Moving on to the next, approval of minutes of previous meetings. I move that we approve the July 10th, 2019 Board of Finance regular meeting minutes, as well as the July 29th, 2019 Board of Finance special meeting minutes as distributed.
Second.
Discussion on the minutes as they've been distributed. Okay, hearing none. All those in favor of the motion indicate by saying aye.
Aye.
Aye. Motion carries 4-0. Okay, move on to the report of the first selectman, Mr. Dunn.
Yeah, thank you, Sean. Just have a few things to go. Oops, sorry. Just a few things. Phase 2 of the streetscape is on target, on time. We've had a few change orders, small ones. We found nothing but ledge on the west side of the street. So if you remember, we were going to put plantings and trees in. To do that, we'd have to take out a couple hundred yards at least of ledge, and we still wouldn't be guaranteed that they would thrive. So we made a decision to possibly in the future move the planters with bushes. So we took that out. Otherwise, everything's going pretty well. On phase 2, we should be finished with that by the end of September, and we're on time and under budget on that. The Still River Greenway extension, you know, we got a grant, $207,000. We've received the initial design for that to go from the parking lot between Town Hall and Center Fire all the way down to the police station where it will join up with the Greenway. We've had 2 meetings on it to go over the actual design, where it is. We're going to make one change to it. We want to keep it more along the woods rather than coming out. That may be a little more expensive. Our initial cut on the cost from our designer Freeman is $187,000 to do it, and we have a $207,000 grant. So we're in pretty good shape there. If we have to go behind the fields, it might be a little more expensive, but we think we can get the cost down because our own public works can do a lot of the work. The grading, angling, making it ADA compliant. So we're in good shape there. Marcia's going to talk about this more, but the auditors are coming in towards the end of the month. We're in very good shape for that. We did submit, and thank you guys for meeting, we did submit phase 4 of the streetscape to WestCog with the full approval of the town to support the 20% the town would spend. And that adds to our points, brownie points, because they look much more favorably upon programs that have been funded or grant projects that have been funded that towns have committed to. They've had a lot of trouble in the past where towns apply for grants and never put up the town side, or never go to referendum or to town meeting, and these projects just languish. So that's pretty much what I've got so far.
Questions, comments, concerns for the first selectman? Glenn? Nothing now? Okay. All right. Thank you, sir. We'll move on to the report of the finance director. Marcia, take it away.
Thank you. That we have been very busy. That on revenues and expenditures, I'm passing that out tonight. I'm sorry I didn't get it to you in advance. That they should be already collated for you.
Okay.
And I have in big red letters, first cut only on the expenditures. That they will change, but they shouldn't increase significantly. They should only decrease. That, but looking at the revenues, there should be a two-pager of revenues and a one with a watermark of others.
You should be able to just take a packet
Sorry.
of everything.
All right. With respect to the revenues, the taxes we've been talking about are much higher than, the collections are much higher than what was budgeted due to back collections, that she hired a sheriff and to go out and help collect some of those. So if you look at the second line down, that we budgeted for $275,000 of collections, and we've collected $683,000. That's $400,000 more than what was budgeted. That the current year budget is the average of the last 5 years. So off to the right shows the budget for 1920, just so you can kind of get a comparison of, here's last year in the box in the middle. On the right-hand side is the current year, the year we're in right now. So that 425 that we have as collections was based on a 5-year average. So you can see we are well ahead of the 5-year average last year. And every time we talk about it, the tax collector says, but I'm worried I'm not going to be able to collect it for this year. But we've told her just keep collecting, and we'll worry about that, because there's a finite amount of back taxes, and if she collects them all in
You can
19...
only collect them once.
But then on the third line down, there's an adjustment, and I just didn't want to get anyone excited here, too excited. You can be a little excited, that the way taxes go is it is measurable and available. The modified accrual basis describes it as measurable and available. Available means that it's collected soon enough to cover the current year. Last year, we changed everything except taxes to say available is if we think we're going to collect it in the next year, but taxes were not allowed to go past 60 days. So essentially, what taxes are is you take the collections for this year, you add to August 31st, and you subtract last year's July and August. So it's a cash basis from September 1st to August 31st. Well, part of what we need to subtract out from August of 2018, we collected the normal amounts, but then there was a tax sale for $180,000. So when we make that accrual adjustment to subtract that out, I would expect that the normal collections would be about the same as last year. So usually we don't really deal with this at all, because it's always about the same. What you collect in August, July and August of this year is about the same as July and August of last year. And
Can I just jump in there on that?
Yeah.
You know, about 2.5 years ago, we were looking at these numbers, and I think I discussed it with you, Sean, briefly, in that our overdue taxes were growing and growing and growing and growing. And we said, we've got to get a better way to do this, because people are just ignoring the town, sometimes for 10 years. So we decided to do two things. One is get the sheriff, have them come in, and two, we had never before that I know of actually pushed properties to tax sales to get our taxes. And that's worked pretty well, where people come in and they pay the taxes because they don't want to lose their property. I'm sorry, go ahead.
Is it just the one that you pushed to a sale?
Yeah, it was just one, I think. No, we pushed more than one to a sale, but everybody came in and paid their taxes.
Okay.
One didn't.
And she's going to do another tax sale, but probably not until September or October, or to push it to a tax sale. But last year, in July and August, we collected $350,000 of taxes. 180 of this was a tax sale that we're not going to collect this year. So we're going to reverse that out and put this year's in. I hate this 60-day thing, trying to explain to anyone. It makes us look a little sleazy that, oh, yeah, this, we subtract this. So I thought, well,
I don't know if I would
what?
use that terminology. It's by the book.
It's by the book. It is the rule. It's GAAP. But anytime you have to explain something as an accounting thing, so I did take a look at it and to say, well, what if we said we can't go longer than 60 days? What if we just eliminated this and said, let's do a cash basis Well, that would reduce our fund balance by, so we'd said 0 days. It's just purely a cash basis, none of the 60-day stuff. That would reduce our fund balance by 170,000 because you couldn't pick up July, or an estimated 170,000 because you couldn't pick up July and August. But that's something to think about, and because we should be adding quite a bit to our fund balance this year. We've added quite a bit to revenue. But this year we're feeling good, but 3 years from now, what if we're not feeling good? And you start to think, oh, that 170 would be nice right now. So I'm just trying to explain it. I'm not going to recommend that we change to a cash basis. But that's why that negative 180 is there, just so you don't get an overinflated number. And what we'll do is the auditors come the 26th next week. We'll be finalizing all the numbers. We'll see what we've collected July and August this year and just estimate until the 31st that it'll be close enough.
And so this is consistent with what we've done in the past?
Correct, except the only thing
Is
different.
right, it just
is the
so
bump.
happens that,
Except for the tax sale.
Yeah, I don't see any reason to change. The timing thing, you don't want to flip back and forth.
Yeah.
You want to be able to compare one period versus another.
Right.
Without footnoting it for 3 years.
Okay.
So I think it does the trick just to put that 180 in there to kind of give you an idea of what it should end up to be. Licenses and permits that we did well over budget on the building permits. That includes two of the, one full building permit for the medical center in the cornfield. Is that the right
Yes,
combination?
that's correct.
Of about $30,000. And then there's about $40,000 for just the foundation of the Branson building. So there should be a significant amount more of Branson, but we had budgeted that for next year, and it came when one came in, I think May, and one came in June of this year.
So that was about 70,000.
Correct.
Yeah.
But the overage is substantially more than that, isn't it?
Yeah. There's been a general increase
Okay.
in building permits across the town. Smaller developments, people redoing commercial buildings. We've seen a growth overall.
Right.
And the Branson part is, remember, we put that in last year's budget
Understood.
more than a year ago.
Yeah.
And we did not know, and so to be conservative, we didn't put any revenue in for Branson for last year. Because we didn't know when they'd actually get started.
Right.
But they started early.
Okay.
I don't have any statistics on it, just from listening to them talk about how busy they are in the land use, that they have a lot from the storm, so building permits were up from the storm as well.
That's true.
And so when we tried to annualize it for next year, we tried to take the effects of the storm out.
So when we do next year's budget, we're going to have to look very carefully at the 732,000
Yeah.
because we know what the additional revenue we put in
Yeah,
there, but that may not be there again unless we have further development.
Sure.
For intergovernmental revenues, the only one that sticks out for the 19 year is LoSiP. And what happens with LoSiP is they give us an allocation every year, and if we don't use it, it just sits up there, and we have to spend it first and get reimbursed. And so it was higher because we had some reimbursements out there that from prior years that we hadn't applied for. So we have applied for everything, but that's why it's higher than the annual allocations. Not that the state gave us more money. On the second page, charges for services, nothing too exciting there. That we've got a small accrual adjustment. The town clerk charges, and then the state pays in a little bit in arrears. So we've got a few $100s. This might change by up or down for the accrual adjustment of what the state and federal government owe us. There is not much else exciting on the rest of this page until we get to investment income. That investment income is very exciting. That we budgeted for $75,000 and we've collected $322,000. There's several factors in that. We changed the way we do the accounting. Prior, there's about 40 bank accounts. And every fund had a bank account, and you would spend the money and then shuffle it back and forth between the bank accounts. That's a lot of needless work. And so what we did last September or so was to set up so the due to, due from, you hear that word a lot, is automatic. So if I'm paying a bill out of the basic checking account in the general fund, but it's for a capital project, I credit the general fund, reduce the cash there, and debit the expense over here. And we set it up so Munis will automatically say, oh, we are owed money from this fund, and this fund says, oh, we're owed money to the general fund. That's a whole lot easier and more efficient than moving money back and forth. And it allows us to capitalize, to maximize our interest by having all the money together, having it all swept out every night to earn interest. So that was one change that we made. And then Steve and John, we talked about what else could we do. And the second thing that we've done is zero balance accounts, so that up until now, if we had a check run for $500,000 to vendors, we would transfer the $500,000 at the same time we approved it. But it would take days or weeks for those checks to clear. And so it's set up with the bank that they'll make the transfer as the checks clear, and it won't call us overdrawn. It's kind of how I do it personally, but
It's a form of controlled disbursement. We fund it when the checks come in.
I shouldn't say that. So that they just keep sweeping the money in as the checks clear, so that we earn interest on that money until the checks clear. And you can see it's made a huge difference.
So this is all just sort of overnight interest rates.
Yep.
Talking up slowly. What's the size of the float on average on any given day?
Well, at the end of July, we've got $35 million in there. So that's not included here because that was all collected in July. But before July, I think we're talking, we had two separate accounts, and I think we're talking 10 million, 15 million.
And these are sort of effective interest rates of like maybe 1% per annum or something?
They've gone up. John, you have more detail.
Yeah, no, but they're primarily invested in repo rates, so whatever the overnight repo rate is around. So it's north of 1.5% probably, so, but not much higher than that.
And we have a meeting with the banker tomorrow to see, what else can we do to, not only on the interest rate side, but also on the expense side, because the interest is after we take the expenses out. And so if it would be cheaper for us to do wire transfers instead of checks, we're going to talk about that tomorrow to see what else there is.
So the main takeaways then, prior year tax collections, 400,000, and then the investment income.
Right.
Really, those things were driven by different strategy.
Yes.
Yep. And then under miscellaneous revenue, the bulk of that is the money from KERMA that some years that they announce a rebate, and they did announce one in June, and so we accrued it as a receivable last year in the same manner that we did the year before. The expenditures, on the revenue, I'm very confident, just because I've tied all the revenue out to each of the different departments. The land use has theirs, the police have theirs, the tax collector has theirs. So I've tied all the revenue out to theirs and have gone through it in a lot of detail. The expenditures, I haven't gone through in as much detail other than what we've done throughout the year with the meetings. But the expenditures, we're also in very good shape. What we're doing now is just going through the encumbrances and what's out there in the encumbrances, that they have to put in a purchase order, and some of the purchase orders are just done and can be closed, and some we're still waiting for the final bill, and we just need to know where we stand so we can get a better estimate of that. And so we want to review that. We want to get final numbers before we ask for year-end transfers. But that is very, very preliminary. It is going to change, that we're going to change the purchase orders. We primarily have the accrued payroll done, with, maybe a few thousand here and there, that at June, the first payroll in July was 100% accrued against last year, but there's some firefighter pension money that's in there that we have to kind of do a negative accrual to, that, and then the first pay period had June 30th that we'll push back to make it perfect. But at the bottom of the page are what we have left to do. We'll go through it, and we want to go through it in detail. We want to go through with the departments, with the purchase orders, payroll accruals, and this does include all the bills that we have so far, except for Hooker and Holcomb, which is sitting on my desk. But there might be some minor additional bills that come in, but we're not expecting anything substantial.
Can you talk us through legal, healthcare, and then the police, if you don't mind?
You bet. Legal being town council, or legal being
Legal
pension?
fees. Yeah, legal fees. The first page, first department.
So legal fees, that we had a large budget in there that we talked, Steve and I talked about January, about people are very, department heads are very scary about talking to professionals about their fees. I know that. I didn't take advantage of it, but it affected me. But I know that you can talk to them and say, listen, here's where we stand. So we talked to all of them about purchase orders. We talked to all of them about how could we reduce their fees. That we've talked about the possibility of, if everyone has questions, and having a gatekeeper, and so legal, Steve is the gatekeeper, so that people just don't call up the attorney and say, oh, I need to do this, I need to do that. Well, he has a retainer, but then he charges us. But the charges outside, that's not all the savings. The other part is legal fees here that's under budget are lawsuits. Primarily lawsuits, and we had less this year. That people sue because it's a lot of land use issues.
Mostly land use, where people don't like what we.
Nothing with the salt?
I'm sorry?
The salt from the roads?
No lawsuits on that at all. Yeah.
So I think it's a common, less lawsuits is the primary, and part of it is just trying to manage it a little bit better. We talked to each of them, said, hey, and maybe we have the meeting, and then we say, we'll issue you a purchase order for this, and trying to get them into the purchase order. It's a pain in the neck for a professional, but it's the way we do our budget. So that is legal. What is our next one?
The next one I had in mind was health.
Health is
The health insurance.
health is the same thing. What page are we on for health?
5.
Health is the same thing that we've been talking about all year, that we had over more money than we needed in the budget. And then it's also more money than what we had the last time you saw it, because what's been happening is we bill WPCA once a year for the health insurance for their employees, for the employer portion. We're changing that this year, so we're going to be billing them monthly for any of their bills, so there won't be a big jump in the actual in June. Or big jump down in the actual in June as we get the reimbursement. It should be pretty consistent through the year.
Oh, so they reimbursed us the 284,000?
That's not all reimbursement. That we knew that we would have money there, but if you looked at last time, you saw a report that this has gone down.
380?
The actual expenses may have gone down, and that's why.
So we just overestimated the cost for this budget period?
Yes, yeah, and we talked about that earlier.
And then any big ones to talk about on the police, or are you still going? I mean, you said you
The police,
are
the
good
biggest,
with payroll.
but it's on one day, so it shouldn't be a big deal. That we do get a reimbursement for one of the detectives from the state. And so we'll pull out that expense. It's $9,600. We'll pull that out of here and put it through grants so that you can see the ins and the outs and not just net them together. The biggest one is the training wages. And the training wages, it's something with shooting guns that they couldn't do last
Well,
year.
yeah, this year, after the storm last year, because of the storm, they couldn't get the required training in as quickly as they needed to be in that fiscal year. So they ended up doing it in this fiscal year, but then they had to do it again to stay, because they usually do it in the May, June time period. So we have 2 hits there. One is from the prior year.
And then the union wages are under. There is an officer that went on to military leave, and he was expected to come back in January, but he was hurt while he was over there, and so he is not back yet. So that's the biggest part of that.
Can you remind me or remind us the assumptions that went into the FEMA reimbursement from the budgeting standpoint, where we are on an actual basis, and if there's any risk based upon?
Yes.
Yeah.
So if we go back, we spent about $1.7 million. We originally were told by FEMA we would get 100% reimbursement. They then changed that about 5 months ago and said, oh no, our policy is now 75%. So we have claims into FEMA, which they've approved a few small ones so far. And they sent it to the state for approval, and we received 1 check for about $7,800. We don't see any problems at all with that. FEMA's goal is to completely close our record on August 20th. So everything will be to the state by August 20th. So right now we look to get about 1.5 million. So we will have an expense that we hadn't anticipated based on what FEMA originally told us.
Now, which year budget does
So-
that hit?
So last year, we spent.
Last year, meaning?
In 18.
Okay.
In 18, we spent $700,000
Cash.
in cash, and we accrued $699,000, and we accrued a receivable for that.
Okay.
That so this year we've got $1 million in play. That we'll spend less than $1 million because we've got some significant purchase orders there, which we may be able to close some of those out. So we'll spend less than that, and then our goal is to be far enough in order for us to accrue a receivable that it has to be measurable and available. So available means we estimate to receive it in a year, even if we don't. And measurable means we know the amount. Right now, it's not measurable, but our goal is to get it measurable, available, and then auditable, so that the auditors would,
So can you
Right,
go
so-
through those numbers again? Sorry.
Yeah, that's fine, then
One
but yeah.
point $7 million we estimated as a revenue. You said 75% of that, and then you said 1.5
No,
million.
no, 1.7 million in expense.
Expense, okay.
That's how much we spent.
Yep,
FEMA originally told the town that they would refund 100%.
of 1.7 million.
Yeah.
So then you
Yeah.
said 75% of that would come back, and then you said 1.5 million. It's like 1.275, so where are we picking up the 200,000 off that?
so, originally, when we went to the FEMA meeting, Steve, Greg Dembowski, and I went to the FEMA meeting, and they talked about, well, you're gonna get reimbursed for this, you're gonna be reimbursed for this, and that was, we were thinking it was gonna be like 2.8 million,
Right.
because,
No, that I got, I'm just trying to do the math, the
So-
75%
Soft
of
costs?
1.7 million.
75% of our expenses. They also give us a 5% management fee, right? And we can also apply for all the hours
Soft costs.
soft costs that we have spent since our first meeting a year ago. And they pay that at 100%. So that's what they tell us. And that makes up the difference between the 1.275 and the 1.5.
but I've got to do a calculation anyway next week for the auditors. I'll send that along when we have it.
And then, the 18 receivable, is that still,
It's still a receivable. We thought it would come in with a year, and
Yep.
because we were told that by FEMA, that, but it didn't. But we still think it's gonna come in within this year, so, our estimate that it was gonna come in a year was wrong, but the amount is still good, and so we just keep it there on the books.
so the amount is still good because it's kind of a FIFO type of situation?
Because we'll get at least that.
Right, and so it's the 19 receivable that is in question on the amount.
We want
Because
to,
you'll apply the first $690,000 received to the,
yeah, because on that first receivable, the reason that it was good is we have one vendor that we can cover that whole receivable, that, the series,
The tree
Mhm.
removal.
and so it was not, it was not, a big stretch for the auditors to.
so it's a specific receivable that you're talking,
Yeah.
okay, specific expense that you're gonna be, okay.
One specific expense,
Got it.
yeah.
So our goal is, we want to be able to accrue that this year, to have, it should be measurable and available, they say August next week, but let's say September. We can't get the audit finished until at least October, when the state comes up with their teachers' retirement pension reports, because that gets into our financial statements. So by then, we should have all this, because if we don't, and let's say we don't have a number, which is doubtful, but more likely is we don't have a number that the auditor feels comfortable signing off on, that that's going to come out of fund balance, and it's going to just go down and back up again. And to me, it would be worth holding up the financial statements until we can get them comfortable. They're not due till December 31st.
Okay.
So.
But most likely, there's a couple $100,000 expense hole that will have to be covered somewhere.
Yes,
Okay.
yes, that's correct.
It depends on what we do with the purchase orders. If we can liquidate some of those, we might be really good. But this is the first cut.
Yep.
Don't know.
Well, that would be where it'd be covered from.
Yeah.
Yeah.
So we'll give you worst case
Okay.
scenario.
Okay. Thanks.
Any other questions on revenue and expense for our finance director controller? Okay. Is there anything else in this presentation? Or no?
Just this.
Okay.
Just an idea of where we are, that we're not just sitting there doing, not doing the analysis. That,
No one thought that was the case.
all right, good. That we have a new accounting and payroll clerk that started this week. That Issa, before she retired, took all of her sick time, so we have not been fully staffed for a single week since April, beginning of April. So there's only 4 of us, so we're down a lot. That so you'll see we have a lot of overtime for the one person that gets overtime. That But our new clerk is fantastic. She came in on Monday, payroll day, with a brand new computer system that wasn't working. And payroll is in the review stage now. That Kevin is back at the office reviewing it. Steve will review it in the morning. Everyone will be paid on Friday accurately. Second, we've had an upgrade to Munis that happened over the weekend. That whole lot different in a government than it is in a for-profit. That our IT people used to come in from like midnight to 3 a.m. to do an upgrade. And then the support would be there with the vendors. Munis doesn't work weekends. That doesn't work Sundays. But the IT people have done a great job. That we're converted, we're operating. There's a few glitches here and there, but they're addressing them really fast when we get to them. We had to upgrade. We've talked. This was a third date that we had on the calendar with Munis to upgrade. The first one was I was really new and was too nervous to do it. The second one we were doing something else, but this one was good for both the town and the school. But we have to do it because our version was no longer going to be supported, and that means things like W-2s, which are a specific format, they would not do. Finance Friday. Finance Friday was a lot of fun.
How were the jokes?
They were really good. What?
They were like dad jokes.
What do you call a chicken that does math?
Anybody?
Mathema-chicken.
Wow.
Except that our, no, that was Marla at the police station. Except that our chairman of the Board of Ed thought it was a cluckulator. But we had fun.
Exactly.
But in addition to having fun, we had 25 people that were there for different classes and that were trained. And you actually you don't call it Finance Friday, but you do put in the charter that Ken Post and I are to have these meetings July of every year to train people, to give them updates and things. And so it is part of the charter, not just frivolous. But we had over 25 people attend the classes. We have a written manual that is 58 pages long for purchase order users on purchasing, how to do a purchase order, how to receive something in, how to pull a report to see where you stand. And excitingly enough, that this is a combined document for both the town and the school. So we'll work to keep it up to date. That we did for Finance Friday. The Board of Ed had our people, and we had their people at our Finance Friday. They had our people, minus the jokes and games and prizes, for update training earlier. We have some great pictures on to share. We have another manual like this because our whole thing, as we told you when I came in, that we want to work ourselves out of a job. So if we were hit by a bus is our standard. If we were hit by a bus tonight, someone could pick it up. So we have this manual. We're partway through a manual for budget managers. So department heads on how to manage a budget. They're great at what they do, but not necessarily at budgeting. So that one, I just have to get back to it. And we also have a manual like this that we're working on again to share both sides for how to do payroll. That's the whole payroll process. We've had it. I've been using it because I've done payroll since April. And now we're just converting it to the new system. That is like 118 pages. And again, we're sharing it with the Board of Ed. Other than that, I forgot the one. Do you know why I became an accountant? I didn't have the personality to be an actuary, to be a mortician. And then the audit. Audit starts in August. So we are working on, the bulk of it's in the general fund, it's there. We're thankful for all the things that we put in. So the other funds should be a lot easier this year, but we're working a lot to try and get it up to date, turn it around. Because it's just so much easier to just have that done and on one fiscal year that we're worried about. And one of the things they said in last year's audit was that we hadn't done our UCOA, Uniform Chart of Accounts reporting for 5 years to the state. We are now caught up. That all that was done for. We kept extending it because it required some changes in some of our numbering system. There's still more changes that would be great, but it required some, so we wanted to wait till the June 30th so we could change them in between fiscal years. So that was, all the years were caught up by July 31st. So, any questions?
Questions, comments, concerns, Finance Director? Thank you so much. That's awesome. Great news, excellent updates. Thank you. It's important stuff. Okay, we'll move on to reports of committees. Our audit committee chair has some things to discuss, yeah?
Certainly. What about, Ms.
Oh, I'm so sorry. I'd like to invite Colette Sturm, Chair of the Board of Education, up to the table so we can discuss Board of Education financials. I'm so sorry. There's barbecue sauce there.
All right, so we have the financials. Ken did prepare the initial page just in regards to descriptions, and you might notice that the operating surplus is a bit larger than the last report that you had, and he does detail the majority where that is coming from. First, I do need to say that this figure, while Ken thinks it's fairly solid, it is still an estimate. He does plan to have the full accounting and the final figures in about a week.
It's not in our package.
Yeah, we didn't get that. That's okay.
You don't have to have a
I can talk to
We
you.
have
Yeah.
the numbers.
Yeah.
I sent it with both of them, I thought. All right.
Yeah.
Yes, your email does have it if you do it, but if not, I'll talk through it. So the estimated operating surplus is about $164,592. That the increase from what was initially projected, let's say 2 months ago actually, because I didn't meet here with you last week or last month, is in two areas really. One is special education, and with that's generally conservative estimates were used for the amount and cost of related services relating to special needs. Those tend to be costs that are very difficult to estimate to begin with when you look at the testing and education of the special needs students. But the team that we have in there now has been really good about tightening the estimates and the control of those costs. So for the last 2 years, we've gotten better numbers, and so Ken is going to use that and is going to have greater confidence in tightening up that figure for next year as well in the budget going forward.
Do you have the right personnel in place next
Yes.
year? I know we had a pause.
We have the right personnel that did the controls
Gotcha.
going forward, and then we do have the assistant that is still going to be there going forward as well.
Okay.
The other area where we saw significant increase in our surplus is within building and maintenance costs. Ken had said for the first time, and I'm not sure how long, they really didn't have any significant surprises this spring. Normally when you have the warm weather and you turn on the air conditioning, there's always units that aren't behaving, units that need to be replaced, or repairs that need to be done. This year we were fortunate, none of that happened. So we saw savings there, as well as no, knock on wood, macrobursts or tornadoes or power outages or anything of that sort. So that's another area we saw some gains that led us to the surplus.
Great.
All of our students' needs are met.
Absolutely.
What matters, right?
That's what matters.
Okay. Questions, comments, concerns from anyone at the table? Thank you so much.
All right,
Yeah, very
thank you.
helpful. Very helpful.
All right,
Okay.
sir.
So, I had a informal conversation with Marcia last week after the town meeting. I had to fight through the crowd to to get there. It was very difficult.
There's some of those people, eight of them, you know, that can cause a real
I know,
problem.
it really was crowd control. Anyway, chatted about the audit process and where they are in the process. Things seem to be going well. We just talked about the timing and might be a little bit delayed from the original timeline because of the FEMA, which is fine. But in front of us, we have the...
Not the start of the audit, just the...
Right, the timing of the end, right. But we have the engagement letter for the current year, which Marcia sent to me. I reviewed it, sent it to the audit committee earlier today. Sorry, I should have sent it a day or so before. But from my read, it looked pretty clean. The fees, as you mentioned, are as described and a bit of a discount to last year because we're in much better shape and doing more of the work ourselves. So I have no problem with that. I did need to ask you, I read through it and everything seemed normal, but were there verbiage changes from last letter to this letter that?
I didn't compare it
Yeah.
I didn't compare it to last letter, I just compared it to just reading what I used to do, and
Yeah.
it was equally confusing, and but it all looked appropriate.
Yeah. Okay.
I read it, it seems fine.
Yeah.
Not
So.
much, except for the fees.
So it's my recommendation that we sign it and authorize Steve to go ahead and execute it. Anybody else from the audit committee have comments?
Feel the same way? Thanks for,
You didn't get a copy, but now you do.
thanks for circulating it and reviewing it.
Okay, that's it.
Okay, and I will make a motion that the Board of Finance take the recommendation of the Audit Committee to move forward with the engagement letter and engaging Mahoney Sable for the 2018-19 Town of Brookfield audit.
I'll second that.
Okay, all those in favor indicate by saying aye. Aye, motion carries 4-0. Okay. We look forward to progress updates and all that good stuff as we go. Excellent.
I will say that conducting 2 audits in a 6-month period is a daunting task, so good luck.
We have no noted old business nor new business. Were there any other items to come before the board from any members present? Okay, hearing none. Do we have any members of the public present that would like to give comment? If so, please step up to the podium. Okay, hearing and seeing none, I move that we adjourn. Okay, all those in favor? Aye, okay, we are adjourned, thank you.